What's up, millennials? The stock market is in a bubble. The EV market is in a bubble. SPACs are in a bubble. In this video, I'm going to tell you what my opinion is about all of these statements. And I'm also going to explain to you why I sold a portion of my Switchback Energy shares. Before we do so though, a few things first. First of all, Discord. I created a free Discord channel for you to join, and you can do so by leaving your name and email address at nesami.com/discord. Secondly, Stock O'Clock. These are very short 1-minute videos that I post every single trading day with news about the stock market. And third, don't trust me, verify. I'm not a financial advisor, I'm not an expert, so always check what I'm doing. So I received an interesting comment on one of my YouTube videos, and first of all I would like to thank you for all of these comments because it's very important for the YouTube algorithm to see that I actually have some engagement on my videos so that the YouTube algorithm thinks, hey, that's a cool video to show to other people, right? So this comment is very interesting, I believe, because it has many things to unpack. And this comment also reminded me to criticize myself, to criticize my way of investing, if you will, so that I can always continue to improve my way of investing as well, right? So there are a few things that I want to unpack from this comment. First of all, the comment that all the EV stocks basically are in a bubble. Well, you can ask yourself the question, what is exactly a bubble? If you go into Google, then you're going to see that it's something like a fortunate situation that is isolated from reality. And then you can also ask yourself the question, what is reality exactly? I'm not going to turn this into a very philosophical topic, of course, but it is interesting to think about it because what is reality exactly? Because I think that your reality is going to be different from my reality, right? And the market is simply consisting of many different people that all have their own opinions, have their own realities, basically. My point is that everyone's reality is different because some people can actually say, well, Tesla, for example, is massively overvalued if you look at its current revenue, its current profit, of course, etc. But you can also have people that are on the other side of the trade because always there are people that buy Tesla shares as well, right? So they must have a different reality. They don't think that Tesla is overvalued at that time, right? Because else they wouldn't be buying shares. So those people probably think that Tesla is undervalued, and they could, instead of looking at profit and revenue from this year, from 2020 or 2021, they could actually be looking at revenue and profit from 2022, 2023, etc. So all of the people are thinking about different realities. Some people are looking just at the present, what is happening right now at this very moment, and some people are looking more in like 2 years in the future, 4 years in future, whatever it may be. So is the stock market actually in a bubble? Is the EV market in a bubble? Are SPACs actually in a bubble? I kind of think it depends, and it sounds like a very lame answer, but I do hope that I have tried to make myself a little bit clear. What do you think about this? And the second thing that I would like to unpack from this comment is the question, does this kind of logical valuation actually work? And I think that's a very fair question to ask because I'm spending quite a lot of time on valuation videos. As you might have seen, I'm making quite a lot of these videos, and a lot of people are asking for these videos as well. So does it make sense for me to make these videos, or should I focus on other things instead? And my opinion on this is a little bit two-sided, if you will. On the one hand, I think actually that these valuations do not make a lot of sense. Why do I say that? Well, often we are talking about pro forma valuations when we're just talking about SPACs, right? We are looking at predicted revenue numbers, predicted EBITDA numbers, a certain multiple we actually use. So usually these numbers are just projected for the future. They're not looking at the present value of a company. Because the thing is, no one actually knows what is going to happen to a company, especially if a company doesn't have any revenue just yet. It could be that they won't start making revenue at no point in the future as well, right? So you really have to be careful with that, with those pro forma valuations. And on top of that, the SPACs and the companies usually also try to make it a little bit more attractive to investors because they, of course, want investors to invest in those SPACs, in those companies, right? So they use this like marketing tactic, if you will, that they make the perceived value higher than the actual value so that it makes you think that you're actually looking at a very good deal. So yes, on the one hand, I don't think that making these valuation videos and looking at valuations for SPACs are actually valuable. But on the other hand, of course, there are reasons why I believe that these valuations actually do make sense, and else I wouldn't be making these videos, of course. So one of those things is that I'm sure that there are investors that will actually look at those pro forma valuations and that will actually make decisions based on those valuations, right? I'm pretty sure that happens because I'm one of them. And I'm pretty sure that other people will do so as well. I've made a list that I've shown you a couple of times, I believe, for valuations that I've already done for SPACs, and also to look at their current price, right? And I've made this like metric basically to see whether the SPAC is very undervalued or very overvalued. So I personally would be more likely to invest right now in companies that are in the top of this list because they are relatively undervalued compared to companies that are at the bottom of this list, right? I am probably more likely to make money if I now start investing in CFII or NPA, for example, with regards, or compared to rather, investing right now in NGA SBE. And secondly, I think it is a very useful tool if you want to compare two or more similar SPACs with each other to see which one of those is the best deal, right? And this is where I'm finally going to talk about Switchback Energy, about ChargePoint, because last week I sold about 25% of my Switchback Energy shares, which is the SPAC that is going to acquire ChargePoint, of course, at $42.70. The Discord Premium members got an alert for that, just like for all the other trades that I make. And I'm now going to try to explain to you why I made that trade at that moment, right? So here we've got the SPAC valuation sheet. And as I've just said, here you can see all my valuations for the SPACs that I've covered so far. And if you look at SBE, for example, we see that it's relatively on the lower end of this list. So basically that means it's relatively overvalued at this moment. Okay. If we then look at position number 6, we can see TGPY, which is a SPAC that is going to acquire EVBox, which is basically the European contender for ChargePoint, if you will. So that's going to be an interesting battle to see. But right now, if I were an investor that would like to invest in a SPAC that is working on charging stations, for example, then I would be more likely to go with EVBox right now, to go with TGPY for now, because that one is relatively undervalued still, instead of SBE, which is relatively overvalued, right? So the likelihood, the probability of making money in TGPY is, in my opinion, better than SBE right now, okay? So that is one of the reasons why I took profits in my SBE position and I put some in TGPY and other stocks as well. The second reason for which I sold my Switchback Energy shares was the price to sales ratio. What is that exactly? Well, the price to sales ratio basically looks at the market cap of a company versus the revenue of a company, right? So the price is the market cap and the sales is the revenue, okay? So if we look at ChargePoint, if we look at Switchback Energy, we can see that based on the current price per share, it has a pro forma market cap of about $12.6 billion, okay? That is probably higher than what most people think because most people just look at the shares of Switchback Energy, but you have to look at all the shares that are going to be involved after the merger. So the market cap is about $12.6 billion. So we then have our price, and if we then look at their sales, we can see that in 2021, they expect to have $198 million in sales. Now here you can see all the other revenue numbers for the subsequent years up until 2026, where they expect to have more than $2 billion in sales. So then I calculated the price to sales ratio, which is basically taking the market cap and dividing it by the amount of revenue, the amount of sales, right? If you then look at the price to sales ratio, the PS ratio for 2021 is almost 64, which is very high. If you look at 2022, it's 36, which is also quite high. 2023, 21, also relatively high. 2024 is where it starts to get a little bit better, I would say 12.9. And then it gets cheaper and cheaper, of course, in the subsequent years in 2025 and 2026, okay? Now, if you do exactly the same thing for TGPY, which I did here right below, you can see that the current pro forma market cap is only $3.5 billion, which is a very big, well, not discount, but it's quite a bit cheaper, if you will, compared to Switchback Energy. I will say that they do make less sales in general with regards or compared to Switchback Energy or compared to ChargePoint rather, but the difference is not that large. As we can see, they are going to have, or they expect to have rather, about $145 million in sales in 2021. In 2022, it's about $273 million rather, and in 2023, it's about $451 million. Then you can also take their market cap, 3.5 billion, divided by those same revenue numbers, and then you're going to arrive at price to sales ratios of about 24 for 2021. And if you compare that to Switchback Energy, it was 64, so it's almost 3 times as cheap. If you look at 2022, it's 12.8, also about 3 times as cheap as Switchback Energy or as ChargePoint. And in 2023, it's 7.7, almost again 3 times as cheap as ChargePoint Switchback Energy, right? Now keep in mind, of course, these are projected revenue numbers, just like we said before in this video. These revenue numbers could be higher, could be lower, no one really knows. But yeah, we do have some catalysts for it to be a little bit higher, because Biden, for example, is going to put more focus on EV and charging stations. So we could see higher revenue numbers in the United States, for example. But I'm pretty sure that in the European Union, we're not going to sit still either. And we're also going to start installing a lot of charging stations. So those are 2 of my reasons for which I sold a portion of my Switchback Energy shares and put it into TGPY and other stocks, which basically means that I've looked at the valuation of both companies, both SPACs, and I've also looked at the price to sales ratio of both SPACs. Okay, I hope this video has brought you some value, and if it did, please consider sharing this video with other people, other friends that are in the stock market, for example. Because that is actually one of the best ways that you can help me grow this channel, by sharing my content with others. With that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye-bye.